This is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the technical charts and then try to understand what happened in the market during the day and plan for a better trade for the next day. That's Jan 2nd, Tuesday, tomorrow 2024. First of all, wish you a very happy New Year 2024. And what a beginning of a day today, right? It was a red day, the year. Beginning of the year, I meant, sorry. So it was a red day, indecisive consolidation that trapped the bulls on the very top on the first day of the year. That's what happened. Market surprises. Here's a wrap up. We will come to that after having a quick look at where the charts are and what do they say is. Let's just look at the very simple plain candles first. Doji, doji, doji. 3 dojis. And the pattern has a tri-star pattern confirmation of bearishness, a bull, bear, bear. So it's a tri-star evening star, 3-star pattern which is confirmed after the price went, but did not close below that. That's one thing you have to make a note, but it breached the low of the previous candle, noted out of the 3 candles. So that way it's bearish confirmation of bearishness, and the candle that is formed on the daily today on the Nifty itself. This is the Banknifty. Let's look at the Nifty. It's more or less the same. So it's a doji, and a previous on the 28th we had a small body, absolute consolidation, range bound, inside bar, inside 2 days before candle. So pure consolidation is seen here, plus the last candle indicates it's a doji, which is indecisive, and it looks like it's a gravestone doji. Gravestone dojis are deadly if the price moves below the low of the candle and if it is at the top of the rally. So be cautious on that, right? Bank Nifty, as I said before, 3 doji candles and consecutively. Small bodies, every small body is indecisiveness. The bear bull fight is what you will witness. And today is long mixed price, perfect doji indecisiveness, right? And it's also a confirmation of a tri-star pattern, as I said before. So that's Bank Nifty, and this is Nifty. So indecisive consolidation, pure confirmation, small pullback could be expected is what, and is all happening at the very top of a 30% rally or 26% of the Bank Nifty. That's what we are. And also keep in mind we are in the mid of the rally that's starting from here. It's a 30% rally and it's the top of a trend line channel, very top, consolidating there. Is it getting ready for another breakout after a consolidation and hit the 22K, which is already hit in the Nifty futures today? Or similarly, Bank Nifty, is it consolidating to take out the 49K and head towards the 50K eventually? Right? You never know. But as of now, there is consolidation that's confirmed, and there is indecisiveness that is confirmed. There is slight bearishness indicating a potential retracement that's maybe coming in time is what it says. So let's look at the levels also before we move the wrap up. So first level to take out would be the 831, the new all-time high that was formed today, right? 21,813. And if that's taken out, then 21,900, and the next major resistance that's going to come is 22. It may do that because it's already done that in Nifty futures, as I said before. So once 22 is taken, maybe according to the Fibonacci extension, 100% it may go a little more, 340 points, and then make the corrections. Or it may take its own sweet time to take it to 22K, unlike what people may hope for. So, or it may correct before it takes off. Instead of consolidating, it may break down this gap and correct. So the first resistances we are seeing, it's on territory. It's at 21,830, 900, 22K, and 22,300, 400 at levels. The major support first comes in at 21,675, which is a gap. It also has a 78.6 Fibonacci extension. So that 21,650 is very crucial to decide if that's consolidation that's extending to a retracement or not. Another gap support will come at 21,500, 470 as a gap support there. That's where the previous breakout happened. So that could have support, and the 28 exponential moving average will come at 21,200 nearby. That's in confluence with the 23.6 Fibonacci retracement and a 61.8 Fibonacci extension. So that 21K to 21,200, that's a crucial support zone. Right. Banknifty similarly, it's on the top of a trend line channel. First resistance upside would be to take out the all-time high at 48,630. Then it will be 48,700, 809, and 49,000 eventually. And it could go and probably go further up towards the 50,000 as well, which is completion of the Fibonacci extension. And if a breakout really happens again, it's not a big deal for Banknifty. Remember that HDFC has not broken out from the consolidation zone. And imagine what happens to the Banknifty and the Nifty if it happens. So the support first will come in at 20 exponential moving average at 47,300. Before that, there is a rounding number 48K that can give support. 47,500 can give support, and the 20 exponential moving average 47,300 is also confluencing with the 23.6 retracement and 61.8 Fibonacci extension level. So that 47,000 and 47,300 is going to be a major support. That split then goes to the 46,500 zone, which is a gap. Right. Yeah. So that's levels for Banknifty. Absolutely outside. So let's quickly wrap up. So what happened today is it's a flattish close, very flash, right? Hardly 10 points up on Nifty, and it's just 60 points down on Banknifty. Right? Both form doji, which is indecisive. Both flattish close. Candles are consolidating. Some bearish confirmation is there in the Banknifty, but it maintains 21.700 because of the small moves that are happening all throughout. 48,250 is made in the Banknifty. So remember, this is all 26 to 30% of rally in the middle of that. Previous swing low. From there itself, the prices moved up 16% nearly. So time for correction for takes. But intraday, if you see, the price action was trending up more till 3 p.m. when it crashed. Big sell-off came at 3 p.m. and that's what the day was. Inward V-shape crash. So all the gains, probably, once the 22K was hit on the futures, people started booking a profit, and that's what might have happened. Profit booking. But did not fall too much, right? It managed to end at a flattish close, right? So institutional selling, if I was selling today 855 crores in the cash market, and last 3 days they were buying actually, right? So that got ended. Then the last December and November months were all buying positive by the Fyers. Good thing. Deers were also buying slightly today. That's how the balance happened today. Levels, I'm not repeating this, but support resistance levels are already discussed. The momentum RSI indicator is saying that it's bullish, absolute bullish, no doubt. And it's slightly falling. Dip has happened in momentum. But there is a momentum divergence which is negative, it's bearish in nature. So it could potentially take it to the 21K, where market can find RSI momentum support at 40, and then from there a bounce up can happen. By the time a positive cross divergence will be formed, right? So India VIX spiked today also 1%, 14.68. But VIX is spiking up when the market is at the very top, gives you a warning. It's almost 50% of spike that has happened in 5 months when the market has been moving up and up and up. VIX has been spiking up and up and along instead of having cool off. It didn't happen. So, and the Bollinger Bands are clearly showing that it's a contraction, beginning of a contraction on the bank on the Nifty, and confirmation of contraction on the bank Nifty. Let's see this. Right? The bands are contracting. It was expanding, now it's contracting, which indicates sideways movement is coming. The next short term. Nifty and Bank Nifty both contracting. So that's one thing. And yeah, so technically charts are bullish, no doubt about that, but corrections are not coming. 16% of move and 30% of rally. For the last 16% of move, there's only 3% of correction that happened. Otherwise it was a vertical move from near 20,000 to the 22,000 nearby. So what a move, right? Nearly 2,000 points of quick gigantic move. Some correction has to come in, some serious data. It's a 5% correction is expected, which could come in, and now our market may have its own levels to touch, and then it may come in. But we have to be cautious of the fact that that has not come in, and also be cautious of the fact that the VIX is rising up, spiking up, and probably getting into a new regime, above 15 regime, because it was staying below the 12 for a lot of time. If you look at the major sectors, indices sectors, it is all green there, except the auto sector, which is slightly slipped. Right, not big performance many of them, but yeah, momentum is maintenance bullishness in almost all the sectors, all the major sectors, 6 or 7 sectors that we talk about. If you look at the heavy weights that contribute maximum to the index, you can see they are all green there except the HDFC Bank, which didn't work today. ICICI Bank, except that, all the other major heavy weights, the critic stocks, what they call the HDFCs and ICCs and IDCs and Kodak banks and ICICI banks, and the critic stocks, they're all bullish momentum, all of them. So there are market traders as Fyers is happening very often, mostly on the heavyweight. So that's what it's reflecting. That's why the market is rallying up. So far so good. US indices have hit the all-time highs in the very top, and but this red that's seen today. Dollar is spiking. Rupee remains weak, and crude oil is showing some fall, which is positive. Gold is also at the very top, consolidating, but small fall we see. All resistance is seen there. So I don't know, no big cues. Crude oil prices falling. It was spiking up a little bit when the shipping crisis came in, but now it seems to be falling. So yeah, US indices are at the very all-time high levels, and it had been rallying just like our markets did. That's why, in fact, our markets started rallying when the inflation cooled off, right? Watch that carefully, because US market is a mother market, and then that gives a major global cues for our markets, right? So this may be giving us a chance for a value investing when there is a dip if that comes in. Yeah, as an investor, as a trader, the direction is very clear, but corrections are due. 3 to 5% of correction can be expected any time. So play cautiously, especially because of the fact that the VIX is rising up and the market correction has not happened much in the 16% of the last leg of the rally. That's it. So play it safe, and if VIX is spiking up to 20, cut short your position size and manage your risk. Have tight stop loss and hedge your positions if you're carrying it overnight. Or the implied volatility versus the realized volatility, the actual realized volatility. The different spread is indicating that it's slightly in favor of this option seller, so that's where the premiums may be higher, and then you may be able to make money. But you ought to be aware of the fact that the volatility, is much bigger than what it had come in at the 10 levels, right? 15 levels already spikes and crashes like 3 p.m. crash today, what happened, or it can be much more bigger. So you have to get used to that. So tomorrow is a Tuesday and Infinity weekly expiry. Oil levels as of now indicates a very wide range, 21,000 and 22,000 now. So big moves are expected by market players. Big shocks was betting on puts and the calls. But Brokerage is not bullish enough, so you can expect a small sideways as of now. Right. Look at the charts and then play the levels as per what the OI indicates, and then play it safe if you're going for the expiry trading. Right. That's all I have. The market is bullish, but be cautious of a correction that can come in. Chart candlestick patterns are indicating that. OI is indicating that, because OI is not actually indicating that. OI is PCR is as of now for the next week the expiry. A few more days for that. It's only Monday today, so OI is quite bullish on Nifty, but apart from the OI, the build-up in the futures is happening. The price patterns of indecisiveness and consolidation of Bollinger Bands and all that gives an indication a small group can come in anytime. It can be small or big, it can be furious or slow, you never know how it happens. But so you have to be cautious, just that. Otherwise, direction is very clear for the traders. Yeah, play it safe. That's all I have. If you don't subscribe, please subscribe and share to friends and colleagues so that it reaches out. Once again, Happy New Year, happy trading, happy learning, happy investing. Bye-bye.